Well, back to earnings season, and we've seen how the fashion stocks have been performing and making a comeback. Today, we're going to put the spotlight on Arvind Fashion. It's one of the largest manufacturers of denim. It'll also, of course, having to deal with inflationary pressures with cotton, etc., hitting an all-time high. The fourth quarter revenues did see a jump, but let's talk about the road forward with Kulin Lalbhai, who's now joining us live right here on ET Now. Kulin, it's always a pleasure talking to you. Thanks so much for joining us. The first month of the fourth quarter, January, was clearly impacted by COVID. You had Omicron and lockdowns being announced by states. But going forward, after that, what has happened with footfalls? Are they back? Are they higher than pre-COVID levels of 2022?
So the heartening thing has been that the market has been very, very strong post this COVID wave. I think people came back into malls very, very quickly this time around. Possibly the sphere was not the same compared to the earlier waves. And even if you look at, the months, just the last few months, I think physical retail has come back strongly, even though most people have had to raise the prices by, high single digits, 8-9%. The market has been able to absorb these price increases, and we are seeing customers in the malls. And of course, the online momentum also continues. So the sentiment has been quite strong.
Mr. Lalbhai, given that cotton prices as well are high, what kind of an impact can we expect due to the higher cotton prices on your margins, on your overall input costs?
Yeah, so as I mentioned, most of the brands and retailers have passed on the prices. So whatever is the large increase that happened in cotton led to a 8 to 10% increase in prices in this season. So in a sense, that has got passed on to the customer. There could be another increase in prices in the August-September timeframe when the next season comes and hits the stores. So we'll have to then watch out whether an additional increase on top of where we are would have that impact on demand. But as of now, the current cost increases have been passed on into the market.
Given that the company is targeting a debt reduction by close to 600 crores by the end of the year, can you throw some color on this, how the management is going to achieve this target?
I think we've been very, very successful in our debt reduction. In fact, compared to last year, we have reduced our debt by more than 50%. And, at a net debt level, we are now at a close to 400 crore debt as we exit the year, which is, 100 crores less than even what we had indicated and guided. So we have actually beaten our assumptions and forecasts on year-end debt, which shows that business momentum and collections have been strong throughout the year. And now we believe we have a very, very strong balance sheet position. And as the company continues to generate cash, we will continue to reduce leverage in the years to come.
Right. So across the board, Kulin, we've seen sluggishness in demand from, tier 2 and 3 cities vis-a-vis metro cities. Tell me about the rural recovery and how it's panned out for you.
So our company does not have a very large rural exposure. I would call our tier 3, tier 4 exposure as more semi-urban. And we have, as I mentioned, not seen a demand destruction in our category, even in those smaller class towns where our stores are present. In fact, even if you look at online demand, a large part of online demand is, outside of tier 1, tier 2. And that demand also continues for us. So as of now, we have in our category not seen a slowdown in the smaller town.
Right. And could you also talk about online sales? Are they still seeing sustained momentum?
Yeah, so our retail momentum continues even on a much larger base. We continue to grow at over 20%. And, we've hit 1,000 crore scale when it comes to digital. On a fully recovered business, which means that were offline to not have been affected by COVID, our share of online is already between 25 to 30% of our overall sales. And I think over the next 5 years, as a percent of the business, it should keep going up because world over, online grows faster than offline. And it will happen in India because we are still at the early stage of online penetration. So we believe, this current share of 25-30% will keep going up in the years to come. And we've built a very omni-channel focused company. So we are very well set to grow in this new age channel in the years to come.
Kulin, talking of new age channels and tech, you folks, of course, have brought Sephora at one point to India. We're seeing what's happening in the beauty and personal care segment. Going forward, with the competition heating up, the likes of Dabur, Reliance Industry, Tata is all believed to be throwing their hat in the ring. What's the larger game plan?
I think it's a very exciting segment, and you are right. The competitive intensity will go up because the segment is interesting. I think our format, the format we represent, Sephora, has a very strong niche. It's in the luxury side of this business, and it has been performing very well. It has a set of very loyal, dedicated customers, and it's a very unique value proposition. There are various other parts of the market that people are addressing and getting into, but we have our kind of niche which we cater to very well with this format.
Okay.